Happy New Year and greetings to you, ladies and gentlemen. In today's video, I'm going to take you through some taxes, basically the personal income tax or the pay as you earn. Before we start the main subject, I just want to remind you by taking you back in the year of 2020, where we saw the Honorable Minister of Finance presented a budget to His Worship, the Speaker of the National Assembly, and in that budget there was a proposal attaching to the tax bands. And what has been the purpose or the intention of the Ministry of Finance to propose the change in tax bands? He says the intention was to relieve employees and self-employed individuals under the personal income tax regime by increasing their disposable income. Currently, the exempted threshold for pay as you earn has not changed since 2017. It has been 3,300, meaning for the past 3 years we've been using the same tax bands. Each and every employee has been taxed in the same tax band for 3 years. But beginning 2021, January, there is a change, there is an increase. There's a proposed increase from 3,300 tax-free amount to 4,000, meaning that any employee who is earning a salary of up to 4,000 kwacha will not be taxed pay as you earn. Okay? Now, the big question is, if we look at the difference between 3,300 in the current regime to 4,000 in the proposed regime, there's a difference of 700 kwacha. Is that 700 kwacha been added to employees and self-employees? If you want to see, let's do the computations together. Stay tuned, follow the video to the end. Okay, so to do that, I'll have to minimize myself. I have to minimize my video. I have to minimize my video like that. Take it in the corner. Then to do that, I need to choose some filters. Maybe image mask. Do that. Alpha. Don't need color. Just alpha. I'm gonna browse that. I'm gonna put that. Yes, I think that's what I want to do. Then I'm going to hide myself in the corner. Okay, so you have the whole screen. To continue our subject, I want to show you something. If we open this, you see that these are some of the changes that we're going to discuss about today. This is per annum. I'm going to introduce you to per annum, then I'll do the exact computations in a monthly basis because most of the employees, they earn their salary monthly. So if you see, in the current regime, it says that any employee or self-employed that is any income of 39,600 is taxed at 0%. Any employee or self-employed who's earning a salary of 39,601 to 49,200 kwacha will be taxed at 25%. And any employee that is earning a salary of 49,201 to 74,400 kwacha will be taxed at 30%. What about any employee that is earning 74,401 kwacha per annum will be taxed at what? 37.5%. This was under the current regime. And if you look at the new proposed regime, you see to it that there is an increase because the proposal is that employees and self-employed who earn a salary of 48,000 kwacha per annum. Per annum is per year. Will be taxed at 0%. And those employees that earn a salary of 48,001 to 57,600 will be taxed at 25%. And those employees or self-employed that earn a salary of 57,601 to 82,800 will be taxed at 30%. What about those employees that earn 82,801 and above? Those will be taxed at 37.5%. So this is what has been the change. Now, in order for you to understand, follow me to the end. I'll break down this into per annum. Then we do computation using examples. Okay. So let's go to our workings. So if you see, I've broken down this into on a monthly basis. So if you see from 2017 to 2020, income tax bands, current year regime. Any employee that has been earning a salary of 3,300 kwacha has been taxed at 0%. Any employee that has been earning 3,301 to 4,100 has been taxed at 25%. 4,101 to 6,200 kwacha has been taxed at 30%. And anyone who's earning a salary above 6,200 has been taxed at 37.5%. This is under the old regime. Let's move now to Pay As You Earn Zambia 2021 January, beginning in January. The proposal has been that any employee that is earning a salary of 0 kwacha to 4,000 kwacha should be taxed at 0%, meaning that you are not going to pay any cent on the pay as you earn. But for those employees that are exceeding 4,000, like if you're in this range or category of 4,001 kwacha to 4,800, you will be taxed at 25%. 4,801 to 6,900 will be taxed at 30%. And above, any employee that is earning a salary above 6,900 kwacha will be taxed at the rate of 37.5%. So, let's begin doing this by demonstrating through an example. Let's pick a salary for an employee. Let's say salary is 7,762.50. I like complicated figures, just to be familiar and yes, because straightforward figures it's easy for anyone to do, but I like complicated figures so that we see if we can do or solve a complicated one. Then straightforward figures like 5,000, 10,000, 8,000, 20,000, it will be easier for you and me to solve. So this employee who is earning a salary of 7,762.50 using the tax funds, how will this amount be taxed? I'll highlight it. The question is, how will this employee be taxed? So how this employee will be taxed, to begin with, we'll say first, okay, this is under the current regime, is 3,300 will be taxed at 0%, okay, and the next is 800 will be taxed at 25%. Again is next will be taxed, this is 2,100 will be taxed at 30%. And what about those who are earning above 6,200 will be taxed at 37.5%. Now, in order for us to know the figure that we're going to put on the above, we need to find the difference. Okay? We need to find the difference between, say, equals 7762.50 minus 6,200. Okay, so you find that the amount which has exceeded 6,200 is 1,562.5. So this amount is the amount that we're going to bring here, 1,562.5. Okay, it shall be taxed at this amount. So to complete our computation, we start from the first. This amount has been exempted. They are taxing at 0. Next, if you multiply 800 kwacha, the difference, this 800 kwacha, mind you where it's coming from, for those who don't know. The difference between 33 and 41 is 800. And the difference between 41 and 62 is 2,100. This is where these figures are coming from. So, if you compute 800 times 25%, you should be getting 200. And 2,100 times 30%, you should be getting 630. What about 1562.5 times 37.5? You should be getting 585.94. So the total of this, okay, do this. I'm going to do this. Okay. The total of this is giving you 1,415.94. Okay. This is under the old regime. But what about under the current regime? So take this, bring it here. Okay. Let's see. Under the proposed regime, this is before we go to the proposed regime. Let's name this. This is the pay as you earn. This is the pay as you earn. This is the payable amount under pay as you earn. But there is also a component we call NAPSA. Okay, under the under the NAPSA Act, it stipulates that every employee, either domestic or working for a private organization, you are obliged to pay, a government, you're obliged to pay 5% of your gross amount. 5% of your gross amount. So, if you see, it says NAPSA is gross. What's this guy's gross? This employee's gross is 7762.50. So this amount, the gross, is NAPSA. The NAPSA is going to contribute to be this amount multiplied by 5%. It's going to contribute 388.125. There is also another component that should be that you are going to pay as a tax also, which is National Health Insurance Management Authority, which is National Health Insurance Scheme. So under the National Health Insurance Management Scheme, the Act states that every employee, self-employed or general employees, you will be contributing a tax of 1%. That is from the employees. Also, it applies the same NAPSA and National Health Insurance Scheme. The employer contributes 5% and 1%. The employee will contribute also 5% to NAPSA and 1% to National Health Insurance Scheme. Follow me properly. If you didn't get it, you can write me a comment. I'll explain further. Then, so these guys, this employee's gross is that. So it will equals his gross multiplied by 1%. is going to contribute 77.65. So at the end of the day, total tax to be paid at the end of the day, total tax to be deducted will be equals this plus this plus this plus this. It will be 1,881.69, 1,881.69. Then I'll highlight this one. This will be the total tax to be paid, to be deducted. Then what will be is net. So we do gross salary, which is this amount and formulated. So I'll copy this. Okay, just to be that. So net salary or take home will be equals this minus this equals that. These are deductions, allowable deductions. His net salary would be 5,880.81. Okay, this is under the current regime. Now let us also try to compute on the proposed regime and see if truly this guy's salary is going to change or will be handling the same. So under this, the tax bands now will be, first will be 4,000. This is the proposed, from 3,300 to 4,000. Okay, at 0%, 0%. Okay, next will still be the same, 8,800 at 5%. Next, 2,100 at 30%, and above, anything that's going to be above will be taxed at 37.5%. 37.5%. Okay, what will be the pay-as-you-earn amount? We'll find it here. Now let us see, this employee now, his salary is 7762.50 minus 6,900. This is the new above amount. We're deducting 6,900, remember, because his salary has exceeded it. Okay? If you go to the end of the video, you will see I'll discuss also different categories. What if your salary is not reaching 6,900? How will you be taxed? We'll be talking about that later. So let's see. So you find that this guy's amount to be taxed as above will be anything above, so 862.5 taxed at that. You'll find that 4,000 at 0% is 0. Okay, 800 at 200, 2,200 at 30% is 630. Then 862.5 at 7.5 should be 323.4, 323.4 there. Then now, what is the pay-as-you-earn amount? So the pay-as-you amount is ought plus equals that. You see, the pay-as-you-earn amount in the proposed regime is 1,153.4. Check in the odd regime, you are paying 1,415, isn't it? Yes. Then I'm going to copy this, bring it here, instead of rewriting it, put it there. Okay. So the NAPSA, I'm going to copy this as well. His NAPSA will be equals, it will be the same. This multiplied by 5%, still the same. Skills national health insurance, because this multiplied by 1% equals that. What? Equals this multiplied by 1%, 77. Makes sense. Then total tax to be deducted will be equals this, which is the pay-as-you-earn plus NAPSA plus national health insurance, to be 1,619.15. I like this. 10. Then his gross salary was 7,762.5. And what is his total deduction? His total deduction is this amount. We'll copy here. Okay, there we go. Then what is his net salary? His net salary is just the addition of this as rather not addition but subtraction. Gross salary minus the deduction, which you find $6,143.35. His net salary has increased as opposed to his the current regime salary. Let's find the difference between the two and see what's the difference in here. If we want to see if it truly is the 700 which has been added to the employees or self-employed salaries. So, in conclusion, here, we'll put it in the middle, down here. This amount, say, equals Salary in the old regime, for easy understanding, I think, as a profession, we say salary in current regime which is this, and salary in proposed regime is this. So the difference, current minus proposed minus current, will give you 262. See, 262.54. This is what it means. So the proposal to increase the tax-free amount from 3,300 to 4,000, it is, when you think about it or when you see it, it's 700, but in reality, the increment has been 262.54. Let's try another amount. The sum working? Let's try another amount. I'm going to move this. Let's say an employee that earns a salary of let's say 4,500. An employee that earns a salary of 4,500. How will this employee be taxed? We'll copy these bands. Okay. I'm sure by now you know. The bands are the same, they don't change. It's only the difference that changes between your maximum and so we do this. We're going to remove this amount because it will now change. It will not be this amount. So this employee who earns a salary of 4,500, the question is, we have got a maximum amount which is 6,200. Where is it? What can I show you? 6,200 here. Now, this employee who is earning 4,500, can it be taxed at 37.5%? The answer is no. Why? Because he's not reaching his salary is not reaching 6,200. You come here on the next, you ask yourself again, this employee, when you add this plus this, it gives you 4,100. So if you add also this, it will go to 6,200. So will he be taxed at 30%? The answer is no, because when you add all the bands, they are above his salary. But the first band and the next band, if you add them, the total you get is 4,100. Now, is 4,100 less or above his salary? it's less than his salary. So if it is less than his salary, meaning that he will be taxed here, just here, at 25%. That's what this means. Follow me closely. I'm saying if your salary is less than the above or limited threshold of 6,200, you can't be taxed at 37.5. If you add all this, it's still exceeding your salary, this one, you can't be taxed at 30%. If you add the two, if they are exceeding this again, you can't be taxed at this, then you earn this, no tax. But this one, 4.5 is above these two. So meaning its tax will be just here. There will be no need for this. It will be just here, 25%. So let's do the computation, you see. So it means that salary 4,500, it will be equals 4,500 minus 4,100. Okay, so meaning that the only tax will be 400. The only tax 400. So here it will be taxed at 0, because 33 times 0% is 0. Here, where his band is reaching 4.1, that 4.1 which was used on this formula here is up to here. So it will be taxed 800. Now instead of 800 here, you will not put 800. Okay, the amount which is going to be here is 400. Okay, so you say 400 times 25% is the amount you put there, which is equals 400 multiplied by 25%, which is did I do that right? You see, just give me a second. 4,500. So as we are talking, first 3,300 0%, then 400 at 25%. We said equals 400 multiplied by 25%. There we go. 25% is 100 kwacha. 100 kwacha. Meaning that the pay as you earn you will pay is 0 is equals to this plus this equals to 100 will be the pay as you earn you pay. Then NAPSA, the deductions, we'll copy this as well. Okay, put them there. So NAPSA will be the same. Your gross pay is 4,500. The salary, so it will be equals this, your salary multiplied by 5%. Okay, there's a dollar sign there if you can see. Sorry for that. 225. The NIMA again 45. So it will be equals your pay multiplied by 1% is equals to that. Total tax to be deducted will be equals that your pay as you earn plus let me do this formula there, equals that your pay as you earn plus NAPSA plus that give you 370. Okay, 370. So your gross salary is 45. Okay, and your total 4,500. The total deductions is 370, meaning your net salary is going to be equals that minus that, then 4,130. This is under the current regime. Then coming to the new proposed regime, we have lost our heading, so in short what we can do, I can freeze this. Okay, I can freeze maybe even up to here. Yeah, so what we see what we are guided. Okay, then I can do view, I can freeze the panes. Okay, so that we have that, so that we are able to see what we're talking about. Okay, then under the new, yes, under the new, we'll copy this, we'll paste it here. Yes, under the new proposed regime, this is the only thing changing. It has increased now to 4,000. Okay, 4,000. So any employee earning that is still the same. The bands are the same. Please allow me to do that. Okay, so if you earn a salary of 4,500, the question is, how do we know they're above? Is it above? The question is the same. The question is the same. The total of this will now be 6,900. Is your salary more than 6,900? The answer is no. If you add up to here, it will be still 6,900. So you will not be taxed at this as well. If you add these two, you ask yourself, is my salary less or above the total of these two? The total of these two will give you 4,800, but you earn 4,500, so you are still under, so you can't be taxed at 25%. But you'll be taxed where? Here, you see. So they're telling you that here the tax band is 0%. So from your salary, so find it here, equals from your salary 4,500 minus the exempted amount 4,000. Okay, you will find that your salary is what? 500. Your tax to pay is 500. Your what did I do? I've computed on the wrong panel. It has to be here. 4,000. Yes, will be taxed at 25%. Since this band falls in here, sorry for that. So equals 4,500 minus 4,000 equals your 500 will be here, will be taxed at 25%. Okay. I'm supposed to compute the actual amount. Let me put it here. Equals 45 minus 4,000. 500. So here you say equals the 500 multiplied by 25%, and you get 125. 125 is a tax payable. Okay, is a tax payable, which we shall equals 0 equals this plus this equals 125. Then your NAPSA, you compute your NAPSA, your gross, you just copy this, you put them here. Okay, so is equals to this multiplied by 5%, multiplied by 5%, finds 225. So in short, this will remain, doesn't change. Just copy them, put them here. Okay. Okay. So here, total tax to be deducted as changed. You can see this is 370. This is 3095. 3095. If we bring your gross there and to be your total deduction, that here, what will be the net salary for you? The net salary for you will be equals this gross salary minus your deductions, 4,105. 4,105. Now let us see. Salary in current regime 4,130. Salary in proposed regime 4,105. 4,105. The difference this minus equals this minus that 25 voucher. You see, so what this means is that you wanted the difference is 25. Write down it right. So basically that is about So in conclusion, we can do another example. At this time, let me just say we'll have to end here. For those that wish for more examples, you can write your comments, write the amounts that you would like me to compute. Then we'll surely do another video based on the amounts that you put on your comments. And if you like this video, so that in the future we shall do these videos about the country's updates based on the taxes, or if you have got any questions that you'd like me to explain about regarding taxes, bring them on. We'll do this together. My name was Martin Makofi as the presenter. Thank you so much for your time. Stay safe, mask up always, wash your hands, sanitize. Cheers.